It's that time of the year again. EPF just announced their dividends for 2023, and at first glance, it does look pretty impressive considering the volatile year that we've had, especially in our local market. So in today's video, I'll be talking about EPF's 2023 performance, the market landscape and how this relates to EPF, as well as why I think it's so important for us to stay invested in EPF for our retirement. So for 2023, EPF is paying out a dividend of 5.5% for those of you guys on a conventional portfolio and 5.4% for those of you guys on a Shariah one, with a total dividend payout of almost 58 billion ringgit. This compares to 5.35% and 4.75% in 2022. Especially for those of you guys on the Shariah portfolio, this is actually a pretty big increase. This is in line with what most analysts were expecting leading up to the announcement. I mean, for the first 9 months of 2023, EPF had an investment income of 47.8 billion ringgit, which is 33% higher compared to what they did for the first 9 months of 2022. But it's important to note that, this figure, it includes unrealized profits, which basically means profits from trades that they haven't closed out yet. EPF only pays out dividends from their realized profits, which makes sense. They don't want to get ahead of themselves paying out so much in dividends because they have a big unrealized profit, but for as long as you don't close out an investment, it can always turn the other way. I've always been impressed with EPF's performance considering that they're managing over 1 trillion ringgit in assets. For those of you guys who don't know, it's actually a lot harder to manage and get good returns on a big portfolio compared to a small one. So for example, us retail investors, we can always trade in and trade out of a stock anytime we want, even within minutes. But for a big fund like EPF, they can't really do that, because any buys or sells that they make, it can actually move the markets. So for those of you guys who have money in your EPF, you should see the dividend amount reflected into your account pretty soon. By the way, if you haven't yet, you should download the all-new KWSP iAccount app. In there, you'll be able to see your EPF balance, as well as all transactions that you've made, including this dividend that should be coming soon. I remember when I just started out working, I used to check my EPF balance every single month to make sure that my employer made my contributions. You can also download your EPF statement from this app, which is pretty handy when you need it for things like loans. Also, for those of you guys who do make voluntary contributions to EPF, you can also do it directly via this app. Later on in this video, I'll explain why I think it's so important for us to have a stacked EPF portfolio for our retirement. Finally, if you guys are wondering, the way that EPF calculates their dividends is based on a prorated basis, just like most other funds out there. So investment-wise, EPF has allocated towards a mix of equities or stocks, and then they also have some money in money market instruments, bonds, as well as real estate. Of their 1.1 trillion ringgit of assets under management, over 60% of it is invested locally, whereas the rest is invested overseas. And this was the tricky part in 2023. While it's important that EPF stays invested in the local market to support it, the FBM KLCI closed lower by 2.7% last year. And the fact is, EPF remains the largest investor in the domestic market with over 700 billion ringgit invested in the Malaysian market. In fact, aside from the developed markets like the US, most other stock markets globally have still not reached their pre-COVID highs. And this all factors into how much dividends EPF can pay us. While investing in the US stock market last year, for example, was easy, where everything was giving good returns, investing in the Malaysian market was a lot more challenging, with only a few stocks giving really good returns. On a bright note though, the Malaysian stock market, or the FBM KLCI, has actually been doing pretty good in 2024 so far, so hopefully this can continue for a while more. Also, with all of the rate hikes that Bank Negara has done over the last 2 years, it probably means that EPF's income from money market instruments and bonds should have gotten a boost. So all in all, once we consider what happened in the markets last year, as well as the size of the funds that EPF is managing, I think that actually did a pretty good job to give us these dividends. With all of this said, I do still think that staying invested in EPF should be your main goal for retirement. I've said this before, even if you can't or you don't want to invest any other money for your retirement, the least you can do is to leave your EPF investments untouched and let it compound over time. Their new iAccount app has this calculator that will help you project your savings in retirement. So I'm going to use this to illustrate how big of an impact this can have for your retirement. So for this, I'm going to use the following assumptions. I'm going to assume that you're someone that is 28 years old and wants to retire at 55. You're currently earning 4,000 ringgit a month, and you're going to get a 3% increment every year with a 2-month bonus. You're going to make your standard EPF mandatory contributions from both yourself and your employer, and I'm going to use a pretty conservative 5% dividend for EPF every single year. If this is you and you don't make any withdrawals at all, by the time you retire at 55, you will have over 1 million ringgit in your EPF. I know some of you guys might say that 1 million ringgit 30 years down the line versus 1 million ringgit today is not the same because of inflation, and to that I will say you're exactly right. But the fact is, regardless of inflation, I would still rather have 1 million ringgit than nothing at all. And if you're really concerned about that, you can always make other investments elsewhere, or you can even self-contribute to EPF if you want to sort of help you top up your retirement funds. I know it can be tempting to withdraw your EPF money for stuff like education and housing, those are pretty basic necessities, but I would still rather save that up separately so I don't have to touch this money which is meant for my retirement. Even for healthcare, you can withdraw your EPF money for healthcare. I would still rather have an emergency fund or even buy insurance so I don't have to use my EPF money. It's understandable if you guys don't you really don't have a choice, but try to top it back up when you can afford to. There's really not many other investments you can get these kinds of returns for the risk that we're taking on. We need to remember that our EPF investments, it has a fixed value. We can't see that value go up and down. The value of it won't drop like it would if you invest in stocks. You could get higher returns by investing elsewhere, and in fact I do that too. I invest in stocks, ETFs, all those other stuff for my retirement as well. But once we factor in that EPF has such a low risk, we cannot really compare these two investments. In fact, I would say that both of these investments should have a place in our overall portfolios. And in my opinion, I think it's a really good thing that EPF contributions are mandatory, because I honestly think that if we don't have this, a lot of us won't have much saved up for retirement. The fact that we're saving and investing 20% of our income every single month is pretty huge actually. The general rule of thumb in personal finance is to save and invest 15% of your income every month. So the fact that just from EPF you're already doing more than this, it's actually a pretty good thing. But of course, the more that you can invest, the better, especially if you're young, because we have a lot of time to let our money compound. Even if you're a freelancer or someone who has a job that doesn't have EPF contributions, you can still make self-contributions and register for the iSaraan program. This is actually pretty good. The government is incentivizing this, so any amount that you self-contribute towards EPF, they will match it by up to 15% with a maximum of 500 ringgit per year. I actually quit my job sometime last year, so this is perfect for me and it's something that I will do in 2024. So let me know in the comments below, what do you guys think of EPF's dividends this year? Personally, I really love that feeling of seeing an extra few thousand ringgit being credited into my account. It reminds me of why I invested in the first place. So thanks for watching this video to the end, guys. I hope you guys enjoyed it and found it useful. Give us a huge thumbs up if you liked it and subscribe to our channel if you haven't already. See you guys in the next one. Peace out.